we are going to answer some questions about cash value life insurance. So we frequently receive questions about whole life insurance products, typically centered around the cash value. Individuals are interested in maximizing the cash value, choosing the right company, setting up their product so they can pay into it for a very short period of time, or maybe they want to pay into it forever. Then we talk about loans, taxes, and everything else that comes with a whole life insurance policy. So in today's video, we are going to answer a question. It's actually a series of questions for an individual that is interested in a whole life insurance policy. Cash value is his goal, but what he's primarily interested in is maximizing his cash value, and he wants his policy liquid. The main reason why he wants his policy liquid is so he can access the cash value specifically for real estate and business opportunities. He's in the medical field. Right now, he's in the planning stage, meaning he's ending residency. He knows his income is going to be very high. He has some real estate investments right now. He's done well for himself at a very young age, but he wants to get everything set up correctly. And he's asking a lot of questions about how he can use a whole life insurance policy. So his questions are as follows here. He's got a couple of them. Number one, can I access my cash value at any time? So with a whole life insurance policy, the answer is yes. When you have a whole life policy, whatever you have in cash value, you have access to. And there's no penalties or anything like that, which he did ask about as well. We'll touch on that in a second. But whatever you have in cash value, you can access anytime. The only thing to be aware of is if you make a payment. So let's say you make a PUA deposit. That's your PUA rider, which will immediately do what? That'll build cash value for you tomorrow. So if I throw in $10,000 today, tomorrow I would see, call it $9,500 of that $10,000 available in cash value immediately. If I do that, you will see some companies have a 10 business day wait period before I can turn around and actually access that money. So that's something that's beneficial to be aware of, because companies sometimes do want to make sure that the funds clear from a bank account and such. But the answer to the question, can I access my cash value anytime, is generally yes. Depending on the company, I might have to wait 10 business days or something like that. But again, generally speaking, I can access it anytime. His follow-up question, if not, when can I take out some of my cash value? Well, you can take out your cash value through a policy loan anytime you'd like. Now, you can take withdrawals as well. So a follow-up question some people ask about this, and this typically comes in the later stage, is when it comes to actually accessing money in your policy, there's two transactional methods in which you can actually get to your cash value. The first one is what everyone's used to, which is policy loans. Policy loans are a beautiful feature of whole life insurance products. It functions very similar to a line of credit in the sense that I can borrow against my policy and I continue to earn dividends and interest on everything. So what I mean when I say that is if you've got cash value, let's say of $100,000, and you elect to take a loan, do it up here, for $50,000. Well, you can borrow $50,000 because you had $100,000 in cash value. Whatever you have in cash value, think of that as your available equity, the line of credit that determines how much you can borrow. What will happen in this case is if you take a $50,000 loan, there is interest, a cost to borrow, that goes to the insurance company. You'll also see your death benefit collateralized by $50,000. So any time you take a policy loan, your death benefit will drop dollar for dollar. Now, going back to earning interest on everything, is if you have a whole life insurance policy, you have dividends. Dividends are not guaranteed, but you've got a guaranteed rate plus a surplus that's going to come out to the total dividend rate. If you don't borrow, dividends are being applied to the full $100,000. If you borrow, dividends are being applied to the full $100,000. So why a lot of people are attracted to policy loans is because I can borrow against my cash value while it continues to compound for me over time, meaning there's no lost opportunity cost. Now, with that said, it's still very important to factor in the cost to borrow, the loan interest, and we've got case studies that go through that. But that loan feature is attractive because the money continues to move forward for me. Now, the second way to access money is through a withdrawal, which is exactly what it sounds like. So if you've got $100,000 just in cash, right, in your checking account, let's say it's earning 5%, that'd be a nice bank account. But if you've got 100 grand earning 5% and you decide to withdraw $50,000, what happens to your checking account? Well, you pulled $50,000 out, so now you're going to earn 5% only on the remaining 50 because you've pulled money out. So with a whole life insurance policy, it will function similarly, meaning if you take a withdrawal, you no longer earn dividends and interest on that money. With a loan, you do. With a policy withdrawal, you do not. Another item to be aware of with withdrawals is they typically do not make sense during the first 7 years. And what I mean when I say that is if you take a policy withdrawal, your death benefit's going to reduce, and it will impact the MEC limit. So what this means is if you say, hey, I don't want to take a loan, can I just withdraw money from my policy? The answer is yes, you can take a withdrawal. Sometimes you can't in the first year, but technically in the second year, if you wanted to, you could. However, if I've max funded the policy up to the MEC limit, then I want to withdraw money, I might get a message right before I actually can take the money. First, I might be told, yeah, you can take a withdrawal. Then it's like, oh, if you do that, you'll actually trigger a MEC. Okay, I don't want to do that. So why we have to wait beyond the first 7 years, that goes beyond our initial MEC test. Another name for our MEC test is our 7-pay premium test, which is the first 7 years of a life insurance policy. So a lot of extra info, which is the purpose of this video series, but here's where I'm going, or here's what I want to highlight. With the two methods to actually access your cash value, loans and withdrawals, if you want to use your policy, like this individual wanting to use it for real estate and business financing down the road, policy loans will work beautifully. When withdrawals work very, very nicely is when I want to take income from the policy, particularly in retirement when I'm no longer making payments and I say, I just want to supplement my retirement income and I'd like to use the cash value in my whole life insurance policy to do so. In that particular case, an efficient strategy to get money out is typically first, withdraw up to my cost basis. Your cost basis is the total dollar amount you've paid into the policy since day one. And then once you've taken withdrawals up to your cost basis, if you continue to withdraw beyond your cost basis, you're going to be taxed as ordinary income. So we don't want to do that. What you'll typically see as a strategy is after we hit that cost basis, one will begin to take loans without paying any loan interest. We're taking those loans as income. This way I can continue to take draws against the policy and keep it tax-free. Now, we do have to, as an agent, make sure we never trigger a taxable event in that case, which is easy to do, but this is my long-winded explanation to say there's two ways in which you can actually access the money, which are policy loans and then also withdrawals. He had some additional questions, or follow-up questions. This guy, what are the penalties? Are there any penalties? The answer to that question is no. With a whole life insurance policy, you do not have any penalties, you do not have any surrender charges, nothing like that. A lot of times people will assume that this exists, and a big reason why is because if we were to look at a similar type of cash value life insurance product, a universal life product, usually we see this through an indexed universal life product, you will see what is called the surrender value. What you'll also have is accumulation value. And on an illustration or your policy, you might see an accumulation value of, let's say, $50,000, but then a surrender value of $20,000. It depends on how old the policy is really. But the surrender value represents the value that you will receive if you surrender the policy. So if you were to cash it out, there's your surrender value there. Now, IULs are not our specialty, but sometimes people do ask about penalties because of the terminology we see in universal life type products. But to get back to this question about penalties, do they exist with whole life insurance products? They do not. So with penalties, while there's no penalty if you cash the policy out or access your cash value, what I do like to describe to individuals, let's go back to this $100,000 in cash value example. Here's something I like to explain because I view it this way myself. If I want to access that money, there's no penalty that I'm going to be dinged with. However, if I take out a loan, what will I have? There's going to be loan interest, a cost to borrow. The rate will depend on the insurance company and product that I have, but that interest is a cost that goes to the insurance company. Yes, it's not a penalty, but it is money out of my pocket to the insurance carrier. Beneficial to be aware of that. Another thing people look at is when I'm paying into the policy. So let's say I make a payment of $10,000 per year. Let's say this policy is brand new. This is you make a $10,000 payment, and we'll assume that your cash value in the first year is $8,500. So you paid in $10,000, you have $8,500. If you said, I don't want to do this anymore, let me cash this thing out, what's the hit there? Or what could you view as a penalty? Technically, it's not a penalty, but what's the cost? Well, $1,500. That was the hit in the first year. Worst part about a whole life insurance policy will be the first year. Even when we maximize the cash value, we've got that negative hit right out of the gates. So we're going to minimize it and break even as early as possible. This way we're not losing any money when we look at the policy. And his last question was, when are there no penalties? Which there aren't. It is good to highlight these items though. I found a lot of people do appreciate that. He mentioned that he did want to use the policy for real estate and business. So what we'll look at in a case like that, when someone says, what I want to do is maximize the cash value and then be able to use it. Well, what we'll look at, something like this. So here's a full illustration, one page from a full illustration. We've got the guaranteed values, if he likes to look at things conservatively. And then we've got the current dividend rate. On the far right, when you see intermediate, that represents a middle of the road dividend, a rate between the present dividend rate and the guaranteed rate. But if we look at the net cash value under the current dividend column, here's the cash value buildup. We see that he makes 5 payments of $100K per year. That's a total of $500,000 he's paid into the policy. Paid nothing into the policy thereafter. A lot of people are attracted to these shorter funding scenarios. But then he wants to be able to use the money. I want to use it for real estate. So what people really like to see specifically is, what is my policy growing by each year, whether it's a percentage or a dollar amount. And if I'm going to use it through policy loans, well, what's the cost to borrow? And let me compare the cost to borrow with the interest I received from the insurance company, the total earnings, the dollar amount I got from them. That way I can look at it side by side. So how we do that, scroll your eyes to the far right and see, what is my policy growing by compared to what am I paying in loan interest. So here, the yearly cash value growth, $14,400. Where that came from? So if we look over here, year 4, you're at 405 and change in cash value. We paid in 100. So if we just paid in 100, that would bring us up to 505. But then we see the cash value is now 519 and change. So the total growth we received from the insurance company is $14,404. So what people like to look at, going back to this, is what's the growth compared to the loan interest each year. So I can see it on an annual basis. And then also I can look at my total gain compared to the total interest paid. That's often what's very helpful for someone like this individual who wants to use his policy, again, for business and real estate. And then we'll look at something like we see here, if he pays interest only, or if he elects to pay it off, and he can pay it down however he wants. You know, just one payment, $250K. Usually we don't see it like that. Let's do it this way. There you go. So now it's paid off. I can see that I paid almost $69,000 in total interest. The total gain on the policy, however, $282 and change. Where that comes from is the fact that you've paid in a total of $500, the cash value $782. So the difference is the gain, the $282 and change. See that? And then same thing with the annual earnings each year compared to the annual interest paid. So he had a number of questions, and as usual, I talked a bit too much about the additional details. Really, we like sharing experiences of what others practice or they've learned with their policies when they've asked similar questions. One of the things I always appreciate when I speak with a professional is when they share someone who's in perhaps a similar position to me. They say, here's what someone else did in your position, or here's a similar question they asked, kind of to follow up with what you just asked. So usually we go through that. Anyway, I hope this was helpful. If you enjoyed the video, please hit the like button, subscribe for more, and as always, I hope this helps. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.